The CPI report comes in showing inflation is on the increase. Oil production is being cut, and we're going to expect higher gas prices. Jobs are being added, but still, we are facing a nasty, looming recession. We're going to break it all down and look to see what the charts for Bitcoin are telling us about movements to happen in the immediate future. What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we need to break down some of the latest news reports, analyze what is happening, and then break down the Bitcoin chart. So to start it off, the obvious story is the consumer price index. The reports came in yesterday showing that the CPI has gone up another 0.4% for the month of September. So what does that mean for us as crypto investors watching the market? Well, that means that the Feds are probably going to do a 75 basis point increase for November. In fact, the probability for this is up around 98%. And besides that, we're looking at a 68% chance that they're going to increase another 75 points in the month of December. So this has caused a major dive in Bitcoin and an immediate bounce back. It was like a 7% dip and recovery, which from what I'm reading is the biggest bounce back that we have ever had. The biggest dip and bounce as everyone continues to make wrong predictions and projections about where Bitcoin is going. So when that CPI report came out, everyone was talking doom and gloom prematurely because they had no idea that such a big bounce back was going to happen within an hour or two after we saw that dip. So as soon as they wrote off the entire market, claiming that Bitcoin was going to go to the toilet, we had a massive bounce back. And now they're overly bullish. But the charts tell us something a little bit different as we see Bitcoin playing around with that critical level along the red dash line. We're going to look at that more closely when we break down the chart. But moving right along, oil cuts, 2 million barrels per day that OPEC is going to be cutting here in the very immediate future. This is going to have an effect on the U.S. economy, and we are going to experience some major increases in gas prices. That's not going to be good for the economy, and it's not going to be good for the markets. So OPEC, along with 10 other countries, which includes Russia, they're all staying in line with each other in agreeing to make this 2 million barrel per day cut. So here's what's interesting. When the oil production gets cut, the CPI is going to increase. So that is going to mean less consumer buying power from us because we're spending more money on gas. And that's going to continue to drain the money circulating out in the markets. Plus, it's going to cause the Feds to raise interest rates to fight the impending inflation. Now, when I boil all this down, it makes me beg the question, where is the money going to come from to prop up the markets? We already know, and everyone agrees, that this is going to have a devastating effect on the stock market. We're already seeing it in the Dow, the S&P 500, the NASDAQ. All of the markets are being adversely affected. But we still have people prematurely calling for an all-out Bitcoin run and the cryptocurrency market to run. But what I see is Bitcoin continuing the side banding. And I also see that the alts are taking a much bigger beating as Bitcoin has bounced right back up to that red dashed line, we notice that the alts, the top 100, they're not bouncing back as fast. Sure, some of them came back, but we see more bearish outlook on the alts charts than what we see on the Bitcoin chart. So we're going to keep our eyes on that as everyone continues to make these bad prognostications, flip-flopping on a daily basis, going from bearish to bullish. It's all a bunch of nonsense, but we don't fall for that nonsense right here on the Crypto Pro channel. We look at the charts and see what's really going to happen because the charts do not lie. Okay, so the jobs report. We did see on that jobs report a week ago on the 10th of October that 236,000 jobs were added. And that's great. That's saying that this is a positive aspect for the economy. But it's negative in accordance to what the feds think because they want to cool down that jobs market. If we're adding 236,000 jobs, that means more people having more money. And as they have more money and spend more money, that has an adverse effect on inflation. It will continue to drive up inflation. So while we're thinking common sense, more jobs means more stability and it's a good economic situation, the feds see this as bad. So they're going to want to cool down the jobs market. They don't want people working. They don't want people having money to spend because their number one goal is to beat down the inflation. So it's really sad to see that we're using this jobs report, which is positive, as something that would fuel the fire for the feds to continue to whack us with these interest rate hikes. So we'll keep our eyes on that. And it's interesting how this is all getting so politicized. And so the Republicans are accusing the Democrats of making bad decisions like tapping into the oil reserves. And they claim that, okay, Democrats are against the use of fossil fuels and they are for lowering greenhouse gas emissions. But then they're going to turn right around and say, let's tap the oil reserves and try to lower the oil prices, which is probably not going to work because we only have about 5 total days. If we unleashed all the oil in the reserves, it would be gone in 5 days. Now, since 1950, when OPEC was founded, we've decided that we need to have this national oil reserve. And the goal was to always have 90 days of oil available for the U.S. for emergency purposes. And now it has dwindled down to about 5 days worth. Now, they're not going to unleash it all at once. Reports say that the percentage that they're going to unleash would allow us to use those oil reserves to the point where it would last through mid to late November. But it's not going to have that much of an effect on prices. So we're going to continue to see this political going back and forth, Democrats blaming Republicans, Republicans blaming Democrats. Now, the Democrats claim that it's the Republicans' fault for deregulating the markets, for deregulating oil. And they claim that it's these loose regulations that have put us in this situation that we are in right now. So either way, it's not going to solve itself through politics. We're going to see the same old garbage going back and forth as the Democrats want to move into this upcoming election by making people happy, lowering gas prices so that they can continue their dominance. But I'm thinking that the scale is going to tip and we're probably going to see Republicans picking up seats in the Senate. All right, so last but not least, the recession. There was an interesting story where J.P. Diamond says that the U.S. is going to enter a serious recession in 6 to 9 months. I'm thinking that probably could happen because we're watching the housing market take a serious slide as the bubble is now being burst, and we're seeing prices coming down 30% to 50%. We also see that the used car bubble is bursting. And this is a result of car dealerships across the United States lying about their repo inventory. In other words, while they were milking high prices and driving up the cost upwards of 20% or more on new cars. They were sitting on huge repo lot inventories, and they were not unleashing those repo lot inventories because they did not want to hurt new car prices. Because if they rolled over and sold those cars that are coming from repossessions because U.S. citizens can't keep up with their car payments due to this nasty recession, that would lower the prices on new cars. But now they're at the point where they've got to start to unload those inventories. And people know that they are sitting on those inventories. And this is going to lend to that bubble being burst. We're already seeing new car prices going down. Repossessions are still going up. Defaults on these loans, these bloated loans for overpriced new cars, is going to affect things in a most adverse way. All right, so moving right along, the Feds continue quantitative tightening, and this just draws me back to that same question. Where does the market come up with the money to prop up the prices in the stock market and the crypto market if the Feds continue quantitative tightening? It doesn't make sense to me. And all of that boils down to the fact that we probably will see a continuance of this bear market. I don't see a big major bounce back coming for Bitcoin anytime soon until we get through this recession. But hey, we'll just have to wait and see and watch the charts as time drags on. And in the meantime, I'm not believing anybody, positive or negative. I think anything could happen. We could probably sideband for another, say, 6 to 9 months. We could probably have a big capitulation where Bitcoin loses that basement level of 17,000 and drop down to the $10,000 to $11,000 range. Nobody can tell right now, and I don't think anyone can make an accurate judgment or prediction. The only thing I would say is exercise caution and watch who you listen to, because the big mouths on YouTube are going to flip-flop and change their minds on a daily basis, because we know that a lot of these bigger channels, the number one goal that they have is to get you to sign up for Bybit, to lose your money making leveraged trading decisions, which would be a very bad decision. And you kind of wonder, if Bybit is able to give you $4,000, $8,000 bonuses to come in to do leverage trading, it must mean that the majority of those people are losing great amounts of money, because they wouldn't give you that much free money to make leverage trades if they didn't know for sure that they were going to make all that back tenfold. So keep that in mind as you're listening to people calling out for these bull runs and begging you to sign up for Bybit so they can make massive amounts of money. They get big bonuses to draw you in to get you to lose your money on Bybit. So keep that in mind and be very careful. All right, so let's jump into the charts and see what is really going on and what the outlook is for the short term and the long term. I think it is going to be rather clear when we break it on down. So let's move to the next section here and look at the charts. All right, gang, here we are on the Bitcoin chart. The 4-hour chart is where we will start out. Let me put on my glasses so I can clearly see what's happening here. Now, first and foremost, before we talk about what could be happening with Bitcoin, I must start out by saying that this is not financial advice. Anything that I say here is strictly my opinion, and I'm not making a claim to say that I know for sure of where Bitcoin can go. All I can do is look at the chart and talk about probabilities. So be careful and exercise caution with who you listen to on YouTube. So with the 4-hour chart, the first thing that we can see is this big, massive drop and bounce back. This was interesting to see and to watch as this played out. Here's the big dip that we saw that took us down to $18,300 on the Bitcoin price after that CPI report came out. And why, oh why, did we have this massive run up right after the dip? I mean, this happened within an hour or so. We had a 4-hour candle that closed way down below the point of control price here. which it is at 19,100 or so. And then we just shot straight on up. Now, notice where we stopped on that run up. It made it up here to the 200 EMA line. We had a green candle that closed us above the line and a red candle that brought us back down. And guess what happened? It brought us right back down below the red dashed line. Okay, so this is very interesting that we see the stochastic peaking out. We completed a full cycle here, and now we are headed in a bearish direction. This crossover was pretty definite, and we also noticed that the MACD histogram peaked out after printing dark green bars on the histogram. We are in the light green bars. And we see that the fast line, the blue line, is about to curl over and cross the slow line. Very bearish indication. So this tells me that for the immediate, we are looking at the great possibility that we're going to jump right back down, at least to this point of control node right here, the point of control, which, as I said before, is sitting at 19,100. And then after that, we'll have to look at what the one-day chart is telling us to know if we will fall down into the slip zone. Notice there's not much volume on the VPVR. There's one little node that is sticking out right here down below at approximately 18,434. So if this momentum carries on, it could bring us right back down to where we were when we dipped on the news of the CPI. All right, let's clear that out and we will move on to the one-day chart. Here we are on the one-day chart. Let's scrunch this down and get a good picture of what's happening. And this is a little bit more clear. This is very interesting here, as we can see that we are currently just below the red dash line, and this peak volume node at 19,173, which is about the same level of what we were looking at on the 4-hour chart, is the one thing that could hold us. Now, as we were looking at the 4-hour, it looked like we were about to fall into that slip zone. But what we have here, which could be somewhat positive, is the fact that we've got this crossover on the stochastic that tells us that we might travel back upwards from here, which could get us back to the overall point of control price up above the red dash line. But if this does not hold and it fakes us out, we're going to head right back to this point of control price, or the node that is just underneath, rather. And that node is at around 18,400. Now, what is it looking like on the MACD downstairs? Well, it ain't looking too great, because first of all, we see that the histogram is flirting with the zero line. We see that the fast and the slow line are sitting on top of each other. Now, will the slow line come out of this and cross, or will it jump back up? Time will only tell, and it depends on if this crossover holds or if it is a fake out. And the 1 week chart will probably give us a little bit more of a clue on whether or not the upward momentum will overtake the downward momentum. But for right now, all I can tell you is that based on this chart, this side banding could continue for a while, right here along this big fat peak node that bounces around the red dash line. All right, let's clear that out and let's take a look at the 1 week chart. Let's see here. Is that the 1 week? There we have it. And on the 1 week, let's scrunch this down. And this is a much uglier chart here. Let's get some drawings on here and see what's happening. The one bit of positive on the 1 week chart is that we see a possible crossover about to happen. It did happen. As a matter of fact, we've got a definite crossover right here. But notice how we crossed over here, and it was a fake out and went down, and we see that the slow line, the red line, is on a pretty steady drop. So I'm telling you what, I don't trust this crossover to be the one that starts us on a positive trip that heads back upstairs to get us into the overbought zone. Now, one thing that we notice is that we've got a series of declining peaks on the stochastic. Here was peak number 1. Peak number 2 is a little lower. Peak 3 definitely lower. Peak 4 is lower. And the overall progression is bearish. And we are still on a bearish trend as we've drawn this trend line here on the MACD. We see that we went above it here. We didn't break above it here. We did go above it here. But notice how the histogram is printing lower and lower bubbles as we pop above that zero line. We don't have strong action on the bars on this histogram. So what is that working up towards? Could it be that we are working towards another capitulation where we head downstairs to these great big fat volume nodes? Or are we going to try to make our way back up to the purple line or the black line? Now, I don't have much faith. I would say that the greatest probability is a continuance of this side banding. We're working up to some great big move. And as I was saying before, the feds are draining money out of the markets. So that makes me scratch my head and wonder, where is the money going to come from to prop up Bitcoin and send us into another bull run? To me, it's a little bit too early to tell. So I'm going to say that we're just going to have to proceed forward with the caution flag. All right, now let's clear this out and let's jump to the 1 month chart and see if we can get any clues here. This is a lot more simplified. Let's move out some volume here and kind of scrunch this down. And we see right now that we are teetering on this volume node at 19,200. And after that, we do have a slip zone right here. And if we do not hang on to this volume node here, that would give us a very good chance of dropping down into this major action that comes down into the 10 to 12,000 range. And we see that the stochastic right here is still bearish. We don't have a crossover of the slow line and the fast line. However, we see that the fast and the slow line are running parallel to each other. There is a gap in between, and that tells me that the momentum is still bleeding downwards. All right, let's scrunch down this MACD, and the MACD does have one positive thing, which is this light red bar being printed. But overall, look at the divergence. Look at this distance between the fast line and the slow line. Both of them down on this chart are still trending in the negative direction. So maybe this one light green or light red bar is telling us that we might be working our way back to the zero line, but it's too early to tell. So with the combination of these two lines being divergent from each other and the fact that the overall momentum here is still headed downwards, it tells me that the bear market is not over. So it's a wait, hold, and watch. And while this is happening, while we have this side banding in this area continuing on, it could mean that the alts will continue to bleed. And that's where I see my biggest opportunity for making gains. It's in the alts. All right. And I'm going to be talking about some of my favorite altcoin projects in the very near future here, which includes Matic, Caspa, KDA, Flux, Link. Chainlink is still something that I think would be a great investment for the next bull run. And there's a handful of others. So that is yet to come. All right, now let's just look at the DJI and the DXY. We're going to bump back to the 1 day chart, and then we'll look at the Dow Jones first. And here it is. Big fat red candle being printed right now. We're at the bottom of that red candle, and it looks to me like we're going to have another bearish crossover of the stochastic right there. And this little trip above the zero line on the MACD might be short-lived. I think we're going to go back down below this zero line and be printing red candles on the histogram. So Dow Jones, it's not happy. And let's look at the DXY. This is important, guys. Look at the DXY. After everyone got all excited because the DXY was in this red candle, what happened? We bounced right back up green, and it looks to me that we have another crossover that is about to happen right here. We still have the MACD flying high above the zero with the oscillators, and another crossover about to happen here as the DXY soars at 113. That is incredible. So overall, the trend of the DXY continues on as quantitative tightening is going to push this thing higher. All right, each time we get negative CPI reports and each time that we get the Feds hiking up rates on these 75-point basis increases, we're going to see a strengthening dollar as the world continues to put their faith in the US dollar over everything else. That's not adding to the misery. We know that Great Britain is having a crisis with their bond market. We almost saw a collapse where people were about to lose their pensions and they are buying their own bonds in order to prop up that market. And with that happening, everyone is looking to the US dollar as the safe haven. As long as that goes on, the bear market will most likely continue. So that's what it's looking like in the charts. It's pretty boring, and I would say watch for a continuance of everything that we have going on right now. It's pretty boring, and we'll have to wait and see what November and December bring with the rate hikes that we know will more than likely be 75 points. Possibly higher. I don't know if we're going to get a 100-point hike, but we know that that could cause a big capitulation for Bitcoin. But if it's 75 points, maybe we continue to sideband and maybe 17,000 could be the bottom. So it's a wait and watch. That's all we got for the charts. So we will wrap it up. Let's head back to the studio. All right, gang, that is all we've got for now. This is pretty boring. There's not much that to really get excited about. I really don't see anything catastrophic that could happen within the next few weeks. We're going to have to wait and see what happens on that next CPI report and on the next Fed rate hike. If that 75-point rate hike comes, then I think we're going to see continued downward movement for the next couple of months. And this just means that we're going to have to wait it out and try to do some DCA action, dollar cost averaging into our favorite projects, DCAing into Bitcoin as the bull market is going to get pushed out further and further. I'm thinking, say, 6 months to 9 months, maybe even a year. But everything always works out in the end. The more people say that it's just doom and gloom and everything is going to crash and crumble, I think that's what they want us to believe, because you got to know that the big institutional investors want to push all this down, want to scare all of you out of the markets so that they can hog up all of the wealth as cryptocurrency moves on. In my next video, I'm going to talk about this new CBDC that is coming to the United States and what the effect will be on our markets, the effect on Bitcoin, and what the government could be doing for or against crypto. I don't think they're going to want us treating crypto as a safe haven. We're going to talk about that and why I think cryptocurrency is going to save us from the tyranny of these governments around the world trying to continue to hoard wealth and keep us working people down. So in all, in the big picture, I think things are looking good because technology is going to empower us. And I don't think they're going to have it their way by making some, ridiculously stupid move to try to make cryptocurrency illegal and push the CBDC to take total control over everyone within our population. I don't think it's going to happen. So I'd love to hear your thoughts. Share in the comments below. Everybody has been making great comments. Let's chop it up and discuss it. And in the meantime, I would love it if you would like, comment, and subscribe to the Crypto Pro channel. I'm glad to have you all here. And if you would like to help support the channel, you can help me defray the costs of production by donating through the Super Thanks feature. And thank you for all of you for your continued support along the way. I appreciate you, and I want to do my best to provide you with valuable insight. And I would also welcome your suggestions on what you would like me to talk about. So I think that just about wraps it up. We'll stay tuned until the next video. I'll have more coming at you very, very shortly. I've had a busy couple of weeks, but I should have more video content coming your way. So stick with me. This is Carlton, and I am out.